Hello, I'm Allie Swafford, President of Prosperity Partners Wealth Management. Often we hear it's the Chinese year of the ox or year of the dog, but I'll tell you, 2021 is definitely the year of the vaccine. The coronavirus has changed all of our lives, and certainly we want to give you some facts on ways that we will see impact in 2021, a little hindsight on what's happened from 2020. Some of the things that we should be aware of is Jerome Powell, who was chairman of the Federal Reserve, said on January 14th, we are a long way from maximum employment. And I'm sure that many of you would certainly agree with that. Joe Biden on January 15th said we have to act, and we have to act now. So here are some of the key takeaways. Joe Biden unveiled a $1.9 trillion stimulus and vaccine distribution plan on the 14th. This American Rescue Plan includes direct payments of $1,400 sent to most Americans, bringing the total delivered in a second round of checks to $2,000, including the $600 payments past December. It also extends federal unemployment insurance through September and increases those benefits to $400 a week and raises the federal minimum wage to $15 an hour. Now, whether this will make it through intact is hard to say, but that's certainly the proposal in the $1.9 trillion stimulus. As of the 14th, 23.1 million cases of COVID had occurred in the United States and over 386 deaths. Worldwide, there have been more than 92.5 million cases and almost 2 million in deaths. As of January 14th, the S&P is up 1.05%, the NASDAQ positive 1.74%, and the Dow Jones Industrial Average positive 1.26%. According to the CDC, more than 10 million Americans have received their first dose of COVID-19 vaccine, and nearly 30 million total doses have been distributed. Retail sales for December unexpectedly declined 0.7%, and this decline resulted in 2020 having the smallest annual sales gain since 2009. Some 22.2 million jobs were lost from February 20th to April of 2020, and only 12.3 million have been regained since then as of January 13th of 2021. We still have approximately 10 million people unemployed of those who lost their jobs from February 2020 through April of 2020. According to JP Morgan, the top 10 companies in the S&P index account for 27.9% of its market cap. Additionally, 23.7% of earnings were contributed from the top 10 stocks by market cap. Although there are some risks in equity markets, it's encouraging to see that earnings contribution has kept pace with the market cap, better than during the tech bubble. So for a market update, again, as I mentioned, we have positive markets for the beginning portion of the year, ranging from 1.05 for the S&P to the high of the NASDAQ at 1.74. Large cap value is up 3.6 compared to large cap growth, which is just slightly negative for 2021. And although large cap growth substantially outperformed large cap value for the year, it certainly was evident that in the fourth quarter, value began to make a move on gaining on the returns from growth stocks. Gold prices are a little bit down from where they were in August of 2020, but with interest rates expected to be very low through 2022, commodity analysts and economists expect to see inflation pressure, which could push real interest rates into negative territory. This creates a good environment for gold. The corporate bond spread is lower than the usual 4% at 3.73 and much lower than in the financial crisis when it was 21%. Emerging markets have made a better recovery than the developed markets since March of 2020. And if you look at the emerging markets index, we're up about 18.31 since that March date. The performance for retail and technology led the way from December 31st through January 12th. And we still see airlines, retail REITs, hotels, resorts, and cruise lines have certainly lagged and continue to do so. As far as COVID, the 7-day moving average of daily new cases is above 250,000, according to Johns Hopkins University. On January 8th, 2021, there were 307,983 new cases in the United States, the most in one day ever. In addition, there were 4,491 deaths from the virus in the United States on January 12, which was the most in a single day. As of the 14th, there were more than 23.1 million cases and over 386 deaths in the United States, as I mentioned previously. And again, more than 10 million have now received the first dose of the COVID-19 vaccine. 0 states are on track to contain COVID-19 as of January 14th, and there is a severe outbreak in 23 states, including Tennessee. Hawaii is the only state not experiencing an outbreak, or additional outbreak. Now let's move to unemployment. The unemployment rate was 6.7% in December and November, which was down from October and September. However, a broader measure of unemployment says that the real unemployment rate was more like 11.7% in December. Some 22.2 million jobs lost have not been regained, and we still have about 10 million people. Part of those 22.2 jobs have been regained, but we still have approximately 10 million people unemployed. Initial jobless claims have surpassed 700,000 for 42 straight weeks. From a historical perspective, weekly jobless claims peaked at 665,000 during the 2008-2009 financial crisis. There was a Democratic sweep on January 6, 2021. Democrats officially took control of the Senate with our upcoming Vice President Harris, breaking the tie. In Georgia's runoff election, we had 2 Democrats win, and the party now is stronger, although imperfect, and prospects for Mr. Biden's ambitious legislation agenda will probably run into some difficulty. There are some tax proposals that we all need to be aware of. Among other things, Mr. Biden will look to bring back the 39.6 tax rate on folks making over $400,000, and that will basically be in a payroll tax. On that, he plans to increase the corporate income tax rate from 21 to 25 to 28%. He's also going to try and bring back in some estate planning need, moving the exemption from 11.58 million to 3.5 million, around 5 million when you adjust for inflation. Mr. Biden also would like to attempt to abolish the step-up basis at death, although I do think he'll find quite a bit of opposition even within his own party. Inflation is rising. Certainly we can all see that in food and energy. Morgan Chase believes inflation could reach 2% in April 2021, but then stabilize. Unfortunately, small business optimism is weakening, and there was amid renewed business lockdowns, 9 of the 10 sub-indexes registered declines, with sales expectations declining to negative 4%, the lowest since May of 2020. Refinancing activity is up 93% from January 2020. On January 14th, 2021, the average APR on a 30-year fixed-rate mortgage was 3.014%. Mortgage application activity has jumped 16.7% in the week ending on January 8th, 2021, led by refinancing, up 20.1%. Brexit. In concluding a comprehensive agreement, the EU and the UK have opened a new chapter in their relations as of January 1, 2021. There have been intensive negotiations over a period of almost a year, and the future relationship between the EU and the UK has been successfully reshaped. On the 1.9 trillion stimulus package, know that beyond the stimulus checks and the extension of the unemployment business, that federal minimum wage that I mentioned may have some definite pushback on. There was $350 billion in aid for state and local governments, $170 billion for schools, and $70 billion to fund COVID-19 testing and vaccination. The support for small business is proposed around $15 billion grant program, plus $35 billion for low-interest loans and early-stage capital for entrepreneurs. In a boost for America's poorest families, Biden is proposing increasing the child tax credit to $3,000 up from $2,000 in 2020 and making it fully refundable. So what else is going on in the economy? Retail sales for December, as I mentioned, unexpectedly declined 0.7%. And the results for 2020, we have the smallest annual gain in sales since 2009. 7 of the major 13 categories posted December declines, reflecting a painful holiday shopping season amid foreclosures and the spread of COVID-19. The global PMI for manufacturing increased slightly in December, 53.8 from 53.7. Global PMI for services declined for the 3rd straight month. As we look ahead, we see that the GDP, the World Bank forecasts that our economy may expand by about 4% in 2021. And sustaining the recovery is totally dependent upon the deployment and investment in the vaccine. JP Morgan thinks that the GDP will grow to about 6.2%, with a 4.4% increase in 2021 and 2022 respectively. Goldman Sachs believes that the S&P index will reach 4,300 by the end of 2021. JP Morgan says their target for 2021 is 4,400, but with a range of 4,200 to 4,600. If you would like more in-depth information, we are having an educational webinar titled The 6 Planning Ideas for 2021. Let me move into the screen one way or the other. The year in review and a look ahead. This is January the 26th at 12 p.m. Please go to our website, click the Events tab. You will see a registration opportunity. Of course, this is totally open to the public, open to your friends and family. No cost, no obligation, just good information on 6 planning ideas for 2021 and beyond. So we've kind of caught you up where we are in the economy, but what do we do with that information about the potential of increased taxes? I think we're all aware of that. How should our portfolio be positioned if we're seeing some rotation from growth to value? If we're seeing some small and mid-cap stocks maybe recover a little bit sooner, if emerging markets are now something that has some potential, these planning ideas will certainly be applicable to anybody who is pre-retirement or retirement age as we begin 2021. Thank you all. We appreciate the opportunity to be of service and value to you.